Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another Charts in Action, where we're going to be looking at the S&P 500, and specifically we're going to be looking at both the short-term outlook as well as the longer-term forecast as well. Now, something which is actually very interesting, which was only released this morning, ladies and gentlemen, is that Goldman Sachs has actually released the results of a survey that they have done amongst Wall Street traders, investors, and institutions. Now, this survey basically was asking all of these individuals in Wall Street what did they believe will happen to the S&P 500 in 2026. Now, very interestingly, 25% advised that they believe the S&P 500 by the end of 2026 will rise to 7,250. So that's this first blue line here, ladies and gentlemen. Another 25% actually advised that they believe the price would go even higher to 7,500. Now, 14% advised that they believe the price will go even higher than both these 2 points. So in total, 64% of Wall Street believe that the S&P 500 will increase in value by the end of 2026. Now, if we look at the results in terms of percentages, if we're looking at the current price up to the first target, we're looking at an increase of just over 5.5%. If we're looking at the second target, we're looking at almost 10% increase for 2026. So both is, of course, a very decent increase for the S&P 500, which is definitely, of course, less volatile than the NASDAQ. Now, what about individuals that believe that the S&P 500 will not increase in 2026 and those who actually believe that it would decline? 36% of the market, according to the survey, believe that either the S&P 500 will decline or it will remain at its exact same price. So very interesting survey that was released this morning for 2026. Now this, though, ladies and gentlemen, is all going to depend on what is going to be released by the Federal Reserve, which is going to release their interest rate decision tomorrow afternoon. Of course, their forward guidance for the first quarter of 2026. And something else which is also going to be important is, of course, the US CPI, so the US inflation. One of the most important and unique, rare releases that we're going to see in December is going to be the double NFP release. So we will get an NFP not for a single month, but for 2 months. Now that is something which is very unique, probably going to be the most volatile event of potentially 2025, if not definitely for December. So that's, of course, something we have to take into consideration. That's going to be one of the main price drivers for the upcoming weeks and the upcoming months, especially for the first quarter of 2026. Now, we have seen a dip over the past few days. So if I zoom in, you can see that dip that I'm referring to here. Now, we've seen the dip. The dip, if we're looking at the high, ladies and gentlemen, all the way to the low, it's approximately 1% in terms of the dip. The reason that we're seeing a dip is because bond yields rose significantly yesterday. It actually rose approximately to the highest that we have seen since September. The reason they're rising is because the market is becoming slightly concerned about, yes, the market believes the Federal Reserve is going to cut by 25 basis points, but they're concerned that it's going to be a hawkish cut. So what does that mean? That means that, yes, the Federal Reserve will cut rates, but their forward guidance, what they're going to say for January's meeting and also March's meeting, is going to be extremely hawkish. So they're going to say, yes, we've cut. We believe we don't need to cut again for the foreseeable future. That's actually something that this morning the Reserve Bank of Australia has done. So it's going to be something very similar to what the RBA has done this morning. So yes, they're going to cut, but they're going to give a very hawkish forward guidance for the upcoming months. Now, if we are going to get a hawkish cut, as some economists and analysts are advising is a possibility, then of course that can definitely pressure the price of the S&P 500. Regardless of the fact that fundamentals, depend on how it's going to develop over the next 2 days, potentially may develop a scenario where it may pressure the S&P 500. If we're looking at technical analysis at the moment is at a neutral level. If we're looking at the RSI is currently at 46. That's slightly bearish. I wouldn't say that's bearish enough to indicate that we are going to see a change in trend, because of course the trend over the past 2 weeks has been upward facing. If we're looking at the 2 moving averages, we're still remaining slightly above the 2 moving averages. We're very close to them now though, so again, that's slightly bullish but still at a neutral level. And if we're looking at the MACD bars are on the lower side, but they are rising, so we're definitely at a neutral level when we're looking at the 2-hour chart. And that also is what we're seeing in terms of fundamental analysis, because yes, the market is expecting a cut, but they believe the forward guidance is going to be slightly hawkish. Now, what's going to have a big effect in the short term is going to be the JOLTS job openings. That's going to be released this afternoon. Now, if the JOLTS job openings is significantly lower than expected, then of course that's going to change the psychology and what's going to be spoken at the Federal Open Market Committee today and tomorrow. So maybe that can potentially lower the possibility of a hawkish cut, and it actually will be a cut with a neutral outlook, or even potentially a dovish outlook for the future interest rate decisions, both in January and March as well. Now, if we are going to get the JOLTS job openings significantly lower than expected, then again, we may look at renewed upward price movement. Now, if we are going to see renewed upward price movement, we definitely want to see that we're going to be above the 200 bar simple moving average on the 5-minute time frame, which is at this level. And also investors would like to see that in terms of the RSI, the stochastic oscillator, we're also above the 50 level, which we can see here as well. Now, there's other indications that traders can look at. Potentially, they can look at the breakout, which is basically the breakout of this resistant level here. Alternatively, if they're looking at price momentum being the main indication, then they'll be looking at an earlier signal, which is at this price here. Now, these are two indications that traders can potentially take into consideration. So if we are going to get JOLTS job openings lower than expected, and we get the price trading above these levels, then both fundamental and technical analysis indicates and points to a potential upward price movement for the S&P 500. That's something we can take into consideration. Now, in terms of downward price movement, let's say the job openings is significantly higher than expected, in which case the Federal Reserve is going to be in a much more comfortable position to be able to be hawkish for the upcoming few months and to give, yes, a cut, but a hawkish outlook, then of course the price potentially can decline. Now, if we are going to look at the price declining, what a lot of technical analysts will be looking for is that the price remains below the 200 bar simple moving average on the 5-minute time frame. So basically below this level here. In addition to that, they definitely want to see a breakout here as well. So we've got a bearish breakout, and ideally they want to see the price below the volume weighted average price as well. So the JOLTS job opening is going to be key, especially for the short-term price movement. For the longer-term price movement, like we said, what's going to be key is the Federal Reserve's forward guidance, the CPI, so inflation, and of course, massively important will be the double NFP release, which will be on the 16th of the month. What was very interesting, like I mentioned at the very beginning, is that Goldman Sachs confirmed 64% of Wall Street believe in 2026 the S&P 500 would either rise to these 2 points or above it. 36% believe it will be unchanged or actually see a decline. So that's something, of course, we need to continue to keep an eye on. And it's definitely going to depend on what's going to be released in terms of NFP, CPI, and the Federal Reserve as well. So that's it for today's Charts in Action. Hopefully you found it educational and informative. Enjoy the rest of your day, and hopefully we'll see you on one of our webinars or live analysis sessions. Goodbye.